Hey viewers, you're watching The Savera and I'm Vidhi Joshi. The Income Tax Bill 2025, which was initially introduced in the Lok Sabha on February 13 by Union Finance Minister Nirmala Sitharaman, has been formally withdrawn by the centre. This move comes ahead of the government's decision to introduce a revised version of the bill on August 11, which is expected to incorporate most of the recommendations made by the Select Committee chaired by Baijayant Panda. The original version of the bill considered a landmark legislative effort to modernize and replace the outdated Income Tax Act of 1961 had undergone intense scrutiny, and the government is now opting for a clearer, updated version that reflects both technical corrections and stakeholder feedback. Finance Minister Sitharaman clarified that the withdrawal of the bill was not a reversal of the government's intention to reform India's tax code, but a strategic move to ensure that the new legislation reflects accuracy in language, alignment of phrases, cross-referencing, and appropriate drafting. The need for these corrections was reinforced by observations from lawyers, chartered accountants, and the Select Committee itself, which flagged multiple drafting inconsistencies and ambiguities in the original version of the bill. The Select Committee submitted its comprehensive report to Parliament on July 21, spanning over 4,500 pages and listing 285 detailed suggestions aimed at strengthening and refining the proposed law. These recommendations addressed a broad spectrum of issues, including simplification, transparency, compliance ease, and modernization of tax practices to reflect current economic realities. The revised version of the Income Tax Bill, which is now scheduled to be tabled in the Lok Sabha on August 11, is expected to incorporate most of these changes to provide a robust and citizen-friendly tax framework. Originally billed as the most significant overhaul of India's direct tax regime in over 6 decades, the Income Tax Bill 2025 was envisioned as a modern, streamlined law written in simpler language and structured to be nearly 50% shorter than the existing 298 Section Income Tax Act of 1961. The objective was to align India's tax architecture with global best practices, reduce litigation, eliminate outdated exemptions, and better address contemporary economic challenges, including the taxation of digital and virtual assets. Among the key recommendations made by the Select Committee are provisions that could directly benefit ordinary taxpayers, especially those with income from house properties. One of the notable suggestions is to ensure that 30% standard deduction currently allowed after municipal tax deductions is explicitly included in the revised law. Additionally, the committee recommended extending the benefit of home loan interest deductions, which are currently applicable only to self-occupied properties, to also include rented properties. This move is expected to ease the financial burden on middle-class homeowners and individuals investing in rental housing. Another important issue the committee addressed relates to the prolonged delays in refunding taxes deducted or collected at source. Many taxpayers face significant lags in receiving refunds due to procedural inefficiencies. In response, the committee proposed reforms to make the refund process quicker, more efficient, and transparent. This initiative aligns with the Central Board of Direct Taxes policy direction known as Enforcement with Empathy, which aims to reduce bureaucratic hurdles for honest taxpayers and foster greater trust in the tax administration system. Finance Minister Sitharaman emphasized that the government's intent behind withdrawing the original bill is not to stall or dilute reform, but to improve the legislation's content and clarity. The decision to reintroduce the bill in an updated form was made after considering the feedback from a wide range of experts, stakeholders, and policymakers. The revised bill will reflect the spirit of the Select Committee's deliberation and uphold the government's commitment to implementing a forward-looking, efficient, and equitable tax regime. In essence, the withdrawal of the original Income Tax Bill 2025 marks a transition rather than a retreat from a preliminary draft to a refined and more effective law that aims to serve India's evolving economic landscape. The updated bill, expected to be introduced on August 11, is anticipated to retain the core reformative principles while incorporating necessary amendments to ensure legislative precision, administrative feasibility, and taxpayer convenience. That's all for now. Stay tuned to the Savera for more updates. Do like, comment, and subscribe to the channel.